Okay, this is Mike Reed at tradestalker.com. This is being made recording on December the 19th as we come into the holiday week. My after hours work, after the market closes, I go to my spreadsheet with technical indicators, and I put in the day's high, low, open, high, low, and close, and it gives me some data. For instance, Friday's close was a new high for the last 52 weeks, and in the meantime, some interesting things are occurring here. Um, my indicators are based on the internals of the market, so we see what's going on beneath the surface, not just price, the movement of price, but underneath the hood. So these are the up and down, advancing and declining issues, up and down volume, new highs and new lows. One thing of interest was on this week, on Tuesday and Wednesday, the number of new highs dramatically increased. We were down in the single digits, but they jumped over 100 and hit almost at 87, 113, 89, and the new high list really dropped off. We were in a 400 area, 400, 500 area, new highs, dramatic drop off here. While the market is, the averages are making new highs for the year. Let's take a peek here at a few of indicators. Let's start with the bigger picture, and then narrow it down a little bit here. We have bigger picture, intermediate term off the lows. The intermediate term internal, this is still positive. Note that we had divergences coming into the highs and rolled over. Now we're at a new high, even though we are in an uptrend. We're at an area where we were last at when we were at a lower high. So we have a divergence here. Again, and this is a volume oscillator. The other is a breadth oscillator. This is not keeping pace, although slightly positive, just ready to cross. And this is a bigger picture look. Now, as far as a few shorter term looks, we have new highs and non-confirmations on indicators, volume and breadth indicators. Exactly Friday's new high and lower highs across the board. One thing, we did come off a short-term oversold here on Wednesday and rallied Thursday, Friday. But intermediate term gauges were up and just at about to turn to the downside. Short term just coming off oversold. And in the meantime, the main thing I want to point out here is our sentiment outlook. This is the VIX daily in the open, high, low, and close. We take a look at a chart of the VIX. Yeah, this is the white line here, the VIX on a closing basis. And we have 10% bands on either side of the 10-day moving average. Now we're at the low. We go below 10% below the 10% below the 10-day moving average and turn up from this low, new low for the year. Would be a number of sell signals. Come back to another thing on the VIX in a second. 10-day put-call ratio. Don't have the chart big enough. Lowest level since the April high. Should have blown that up. And this is what really has my eye. Now this is the SP 500 VIX ratio, and I have applied 25-day average and 15% bands. Note that it's at 77 and 0.21. Last reached that high of a level, 77.66. Just before it made a high and we had a pullback, and then one more run to a high to make the April high, and then dropped 200 points on the S&P 500. We're now, after coming off of last month, coming off the bottom band, 10% or 15% band. We're now above the top of the band and at prior highs, prior levels that are extremes. So as far as this goes, sentiment-wise, this is is about as stretched as it gets. Now, it's shaping up. The way this is shaping up is that we could get something very similar to what we had here, since we have a holiday. Either if we don't drop immediately from where we're at, we could drop and then one more bounce into the new year, and that would set up January as a high. The December-January timeframe is a high for the market, and this rally from the lows in July this will be the end of that rally, and we should retrace a good percentage of it. At least it won't be a garden variety 3 to 5% pullback, but something much more. Since we've been in a giant trading range since 2000, I imagine that we're going to go back and retrace probably at least 38% to 48 to 40%, and possibly we'll see if that happens to begin with. To take us down, I want to see the yearly low at 1010 on the S&P would likely be tested at a yearly higher high on the yearly chart. So that was what it would take, and would still keep us in the same kind of conditions we've been in for this last decade. Just a big sideways market with big down bear markets in between, bull markets in between, and basically going nowhere. Well, going sideways in a violent fashion. So it's great for trading, for long-term investors holding. Not been a time for buy and hold. Last decade has been kind of improving that not to be the way to go. So I got sentiment. Sentiment gauges are about off the charts here for extreme readings, while at a high. Everyone, as far as complacency and bullishness, is just too much too soon. Internally, the market's not healthy. Bigger picture, the intermediate term gauges are up but about to turn down. Short-term gauges just came off and oversold. Short-term oversold, got to new highs with divergences. So red flags here that come into the end of the year and January for a top and a decent sized pullback. Come on over to tradestalker.com and you can get the nightly analysis in our nightly updates, and or you can probably join our live trading room for intraday trade setups.